The government concedes it is doing Qantas favours as boss Joyce defends the group's mega profit in Parliament. Fortescue Metals mining boss quits after just 6 months. And Netflix loses subscribers in Australia for the first time in 8 years. Welcome to Fear and Greed Business News, Australia's best business podcast. It is Tuesday, the 29th of August, 2023. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show, you have an interview coming up with Caroline North, who is SEEK's research manager for the Laws of Attraction survey. Now, SEEK is a very good supporter of this podcast.
Laws of Attraction is all about how to attract and retain talent, how that process has changed over the years, what people want now, what companies should be doing. It's much more than pay, much more than work-life balance. I suggest anyone who is out there looking to find staff or who are overseeing staff, have a listen. Really, really interesting.
It's really practical advice. It is a good chat, and funny story about Caroline North, who you're speaking to, but I'll share that with you a little bit later on, Sean.
Okay.
The main story this morning, this is a pretty remarkable story, this one. The federal government has conceded it gives favourable treatment to Qantas and blocked extra Qatar Airways flights to keep the national carrier profitable. And that all came as Qantas boss Joyce was fronting Parliament.
Yes, plenty going on. Assistant Treasurer Stephen Jones yesterday said Qantas is a special case. Now, this comes amid the government's crackdown on monopolies and duopolies. That crackdown is supposed to protect consumers, and given sky-high airfares, the special case status given to Qantas won't necessarily be well received by everyone. The government has long claimed its move to block an additional 28 Qatar Airways flights per week into Sydney, Melbourne and Brisbane was in the national interest. Now, yesterday, Jones told the Financial Review that driving down prices to a level where it's unsustainable to run an airline is not in the national interest. After Qantas announced a record $2.5 billion profit last financial year, up 90% on pre-pandemic earnings, outgoing Chief Executive Joyce said adding more Qatar Airways flights would distort the market. Maybe. But travellers, meanwhile, are paying about 50% more for international flights. That's compared to before the pandemic, and that's according to Virgin Australia. It singled out high prices of fares on routes to Europe, which are dominated by Qantas and Emirates. Now, Qantas says international airfares are only 10% higher when you adjust them for inflation. Whatever the case, the fact that Stephen Jones came out yesterday and said that the government is looking after Qantas, I think is quite remarkable.
Do you think it passes the pub test, Sean?
No, it's a little bit more complicated because obviously the government has always looked after Qantas anyway under legislation, and it's not like Qatar, Emirates, some of those airlines are private companies. I mean, they're funded by governments, and so it's not exactly an even playing field. But the fact that 28 Qatar Airways flights were rejected, which definitely would have put pressure on airfare prices to drop airfare prices. I reckon that part most of us are just cranky about.
Yeah. So it's not a simple pub test. It's like a complicated pub
That's
test.
Right.
Like a gastropub, like something a little bit fancy.
A gastropub. Yeah, something like that.
Okay. All right. And this was all going on it was a big day yesterday, massive day for Qantas, wasn't it? Because this was all going on as Joyce fronted Parliament.
Yes, the outgoing chief executive told a cost of living Senate inquiry that Qantas understands the importance of affordable travel. Joyce said Qantas, which during COVID was 11 weeks from insolvency, had to make some tough decisions to survive. Subsequently, the return to flying hasn't been nearly as smooth as the carrier had hoped. Joyce then suggested the committee consider airport regulations, highlighting that monopoly airports such as Sydney and Melbourne are very profitable, and increasing airport pricing, that's a major cost to Qantas. Not surprisingly, he agreed with Stephen Jones' comments about the national interest. He said he wasn't worried about competition. He also couldn't answer a question on how many flight credits are out there. His response was, well, it changes every day. Slightly wishy-washy, I would say. Joyce's questioning went on, and in fact, by the end of it, he ran out of time and had to delay his flight home.
Did he really?
He did. Some irony in that.
Yeah, it's just a small amount of irony. All right, big story. How did local markets perform yesterday?
The S&P ASX 200 closed up a little over 0.5% to 7,160 points yesterday. BHP led the way. It jumped 1.4%. CSL was up 1.6%. Banks did pretty well. Commonwealth Bank, National Australia Bank and ANZ were all up more than 1%. Wesfarmers was up 2%. Remember, it had a good result on Friday. It jumped about 3% on Friday, another 2% yesterday. Woolies was another good performer, as was Toll Road Group Transurban. Among the weaker performers were Telstra. It went backwards. So too did Santos, REA and WiseTech Global. WiseTech, it's nearly 20% below where it was a week ago ahead of its results announcement. It has not been a good few days for that tech company. Best of the top 200 was Tabcorp, which bounced back up 4.5%. Worst was North American-based lithium miner Sayona Mining. It closed down 27% after the surprise resignation of Brett Lynch as chief executive with immediate effect.
Sean, have you ever been on one of those flights where you're just sitting at the gate and waiting, and they announce that they're just still waiting for one passenger to board or a couple of passengers to board? Can you imagine if that was happening at Canberra Airport and the person they're waiting for, they finally get on, like, Christ,
who is
that's
this
Alan
guy?
Joyce.
Normally when that happens, you see someone shuffling down through the economy, right down the back of the plane, and you go, oh, come on.
Yeah, the walk of shame.
Yeah, he ain't doing the walk of shame.
No, I don't think so. Anyway, I digress. International markets, what's happening?
Chinese stocks jumped yesterday after authorities announced several measures to encourage investors, including a reduction in stamp duty on stock trades. The CSI 300 index of mainland shares rallied more than 5% in early trade. Now, that's one of the biggest one-day jumps in 3 years. One stock, though, not doing very well was property developer China Evergrande Group. Now, remember, this is the most indebted company in the world. It lost about $4.5 billion in the first half of the year. It has been suspended from the exchange for 17 months as it works out its debt issues. Well, it rejoined the exchange yesterday. Share price was down 87%. There you go. In commodity markets, oil is higher, gold's trading above $1,900 an ounce, and coal prices are up a bit there, close to 3-month highs. That's on the back of some rare good news from China, high coal demand. Mind you, I suppose whether high coal demand is good or bad news is probably in the eye of the beholder.
Yeah, it's probably a little bit subjective, that one, isn't it? Now, Sean, there's a fair bit to cover today. We'll be back in a moment with the rest of the day's business news. Sean, Fortescue Metals mining boss Fiona Hick has quit after just 6 months. That's the 10th senior executive at the miner to quit in the past 3 years.
So Hick was announced as the leader of Fortescue's iron ore division in November last year, started in February and exited yesterday. Billionaire Chair Andrew Forrest said the departure was both friendly and mutual. Maybe, but there's a growing list of execs who have come and gone at Fortescue. The announcement overshadowed the miner's full year profit of $5.5 billion, which was actually down $700 million, thanks to an impairment on its Iron Bridge magnetite project. Iron Bridge ended up costing about $4 billion to build. Initially, it was scoped out at about $2.6 billion. That's quite the blowout. Fortescue also scrapped the capital allocation policy that had dedicated 10% of iron ore earnings towards funding projects within the clean energy division. Its share price closed down nearly 5% yesterday.
Retail sales rose more than expected last month, with people eating out more, probably due to the World Cup, but the trend, Sean, is still down.
Turnover was up 0.5% in July and almost 8% higher than a year earlier. But in real terms, which includes the impact of inflation, sales have been declining since December last year, according to AMP's Diana Messina. Last month, food spending was flat, household goods retailing dropped slightly, and eating out rose. There were also decent jumps in sales of clothing and in department stores. As you say, Michael, the trend is still down. Now, the Reserve Bank has said it's waiting for data before making a call on the next move on interest rates. This Bureau of Statistics release falls into the camp of staying on hold. The Reserve Bank Board meets next Tuesday.
Now, Sean, this story is really interesting. Australia is expected to get more hydrogen service stations after the country's largest petrol retailer teamed with a US firm specialising in the alternative fuel. Hydrogen is one of those things that I know very little about.
Yeah, so it's very much heavy transport hydrogen. It doesn't really have economic uses for light vehicles, cars and things like that, but certainly where people think the most opportunity for zero carbon emission fuel is in that area. Now, Ampol announced its partnership with 1H2 yesterday, saying the companies would work together to speed up the use of hydrogen in the Australian market and help cut emissions from heavy transport, according to AAP. The news comes weeks after rival BP opened the first hydrogen refuelling facility at an Australian service station, and after a CSIRO report warned the industry needs to ramp up hydrogen investment or risk falling behind progress overseas. 1H2 Chief Executive Paul Dawson said the company, which has been developing hydrogen transport and on-site generation solutions for about 8 years, would increase distribution of the new fuel in Australia.
The Northern Territory Police yesterday launched a recovery mission for the bodies of the 3 US Marines who died in a military aircraft accident on the Tiwi Islands on Sunday.
Yes, Prime Minister Anthony Albanese thanked the staff at the Royal Darwin Hospital for treating the American Marines who were injured in the aircraft crash. Opposition leader Peter Dutton also acknowledged the deaths. Otherwise, in politics, Michael, Albanese yesterday said the federal government's fee-free TAFE initiative has been popular among students around the country after more than 214,000 students enrolled in a free course in the first 6 months of the program. The PM also said the campaign for an Indigenous voice to Parliament will be a positive one that will encourage Australians to recognise First Nations people in the Constitution. On that topic, Michael, more than 450 directors have joined forces to encourage Australians to vote yes in the referendum, calling constitutional recognition a critical step towards a more inclusive Australia.
Sean, Netflix has lost Australian subscribers for the first time since it launched locally in 2015 as streaming growth stalls amid increasing cost of living pressures.
Research firm Telsight's annual industry survey found the rate of growth slowed for the 7 most popular streaming services. Now, there are 8 platforms with more than 1 million subscribers in Australia. Telsight's managing director, Fawad Fadaghi, said there will be more aggressive behaviour from platforms to win over viewers. Maybe that means lower prices, Michael. You just never know. Netflix is number 1 and it had 6.1 million subscribers, but that was down 3%. Amazon Prime was the main winner last year. The number of subscribers jumped 9% to 4.5 million. Disney Plus was up slightly to 3.1 million, while Stan is now number 4. Used to be number 2. It's got 2.6 million viewers. Next in order are Foxtel's Binge, Paramount Plus, and KO Sports. The subscription streaming market. A lot of hard phrases today, Michael.
There are, and I'm enjoying hearing you go through these.
Anyway, the SSM was worth $2.7 billion in the year to June 30. That's about 14% up on the previous year. Less about the number of subscribers, more because many services actually hiked prices.
So those that loss of subscribers for Netflix, that was based on the last financial year. Is that correct?
Correct.
Because in May, I think, wasn't it? That was when they stopped allowing password sharing. So you would have thought there'd actually be a bit of an uptick after that in subscriber numbers because people who had previously piggybacked off friends and relatives or brothers-in-law would no longer be able to do that.
Good point. You might have to talk to Telsight's man himself, Fawad Fadaghi. Fawad is a great analyst in this space. I used to work with him at BRW, in fact. A very good man. I'll try and chase up Fawad and see what's going on there, Michael.
Thank you, Sean.
I mind you, I say that because I'm about to go on holiday, so you know I'm not going to do it. But still.
Oh, I thought it was more a case of you're going to line up a bit of work for me and then disappear. That also kind of seems
maybe,
about right.
Maybe, yeah.
Now, Sean, not everything AI is gold. It seems artificial intelligence data services company Appen's share price tumbled more than 30% yesterday after it announced a 24% drop in revenue.
And the company warned it continues to face headwinds due to the broader technology market slowdown as customers evaluate their AI strategies. The company, which provides data tools and services for artificial intelligence, made a $43 million loss last financial year. Chief Executive Armagan Ahmed, who commenced in February, said the first half result reflects a challenging external environment. Appen was one of the worst performing tech stocks in recent times. It's gone from close to $40 a share 2 years ago to around $1.50.
And staying in the tech sector, data center operator NextDC announced a $26 million loss for the last financial year, although revenues were up 25%.
The group is busy investing and forecasts it will need to spend between $850 and $900 million this year to support the 13 data centres it operates and another 9 centres that are in development. That's because major customers like Google, Microsoft and Amazon are demanding more cloud computing infrastructure. While NextDC's share price ended down 2.6%, it has been a strong performer, very unlike Appen. NextDC's share price is up nearly 50% this year.
Okay, turning to international news now, and a P&O cruise ship with thousands of passengers on board has collided with an oil tanker off the Spanish coast, injuring a small number of people.
Videos posted to social media show the Britannia, the flagship of the P&O fleet, swaying in a storm that battered the Mediterranean island, causing the mooring holding the ship to snap. According to Bloomberg, a P&O spokesperson said that the Britannia was involved in a weather-related incident while docked in Mallorca, which saw a small number of individuals sustain minor injuries. The ship will remain docked to allow a technical team to make an assessment of the damage. According to the statement, the Britannia cost £473 million. What's that, about 920 Aussie dollars? It can carry up to 3,647 passengers.
That's a big boat.
It is a big boat, definitely.
Way to simplify things there, Michael. Nailed it. Nike, Sean, has posted a record streak of share price losses. Not exactly a streak that it wants, I would imagine, on the back of merchandise stockpiles, slow sales in China, and theft.
Yeah, so the streak was from over the past couple of weeks, really. Nike's been listed on Wall Street for more than 40 years. It started off as a 20-cent stock. It steadily rose to about $10 a share by 2009, and then it found its rhythm, hitting more than $160 a share 2 years ago. Since then, though, it's really struggled, and now retailers in the US are reporting weak sales and a big jump in theft, just like Woolies and Coles have reported here. Also, sales in China are slow. In the past few weeks, the value of Nike, the company, has dropped about $20 billion. And it's not just Nike. Under Armour and Champion owner Hanes Brands have also disappointed investors in recent weeks. Their share prices have fallen too.
Okay, now up next is the Fear and Greed Daily interview with Caroline North, Seek's research manager for the Laws of Attraction survey.
Yes, all about attracting staff and retaining staff. They're very important if you're involved in a business with staff, Michael.
Absolutely, and Seek is a good supporter of Fear and Greed. And Sean, it's worth, I mentioned this at the top of the show.
You did.
Do you remember when we were speaking to Caroline, it emerged that her partner, Sonny, is not just an occasional listener to Fear and Greed, but a devoted, dedicated, very enthusiastic listener of Fear and Greed.
We love you, Sonny. We love you.
And so therefore, I think Sonny is a worthy recipient of our MIA award, our most enthusiastic advocate, the MEA.
What an excellent idea. Yes, definitely. I've sort of lost focus on the MIA awards in recent weeks/months, Michael. So let's get him going again.
Absolutely.
Sonny, you're the winner today.
Yeah, indeed. Well, and because Caroline told us that Sonny listens to Fear and Greed morning and afternoon as well. And so that is dedication. And that is the kind of dedication that we want to encourage. So well done, Sonny. Thank you very much for listening. And you are the recipient of this week, maybe even this month's MIA award. And thank you, Sean.
Thank you, Michael.
It's Tuesday, the 29th of August, 2023. Make sure you're following the podcast and join us online on LinkedIn, Instagram, X, and Facebook. I'm Michael Thompson, and that was Fear and Greed Business News. Have a great day.